Well, good morning and welcome to our first Simply Tax Talks of 2022. We last wrapped up at the end of last year. We had done about 9 sessions. We kind of started these as just a way to share what we've been talking about internally with you, get your questions answered in real time, because we know whenever there's things that have been happening, there's just a lot of questions that come about, right? Especially when the developments are pretty quick. So like I said, we started these with that in mind, and we're going to pick back up with kind of where we left off. Last we were talking about was whether or not we'd see the Build Back Better enacted before Christmas, which obviously didn't happen. And actually, in our last session, we even talked a little bit about some of the uncertainty there, how to approach it, and even got some investment takes on the market and the uncertainty. And that and all of the episodes that we've done here of the Simply Tax Talks, you can find archived on our YouTube channel here. And I highly recommend, if you haven't already, hit that subscribe button so you know when another video, for example, our last Simply Tax podcast video or another Simply Tax Talks are available. That's really what the goal is with our YouTube channel there, is just to provide a bunch of resources for you. So hit the subscribe button so you know when new content comes out. But today I'm excited to kind of pick things back up with our frequent guest here, Yelena, to kind of walk us through the latest on the BBB. So welcome, Yelena. And then we also have a first-time guest here with Ericka Hernandez to talk through the Superfund Excise taxes. So, we had that enacted as part of the infrastructure bill, got some guidance, and now we'll find out a little bit more. So with that, let's jump into our top tax takes of the week. All right. So, Yelena, I'm going to go to you. Obviously, again, the BBB didn't happen before the end of the year. And we were talking so much about it. And then all of a sudden, I have to kind of say that there hasn't been a lot of talk about it, it seems like, almost lately. What's going on, and what is the latest with the Build Back Better conversation?
Yeah, well, we haven't really heard anything since probably mid-December, which part of it makes sense. We went into the holidays and Congress went on recess. And so that was kind of expected. But really what kind of halted everything was, if you remember back in like early mid-December, Senator Joe Manchin said he wouldn't support the BBB legislation in its current form because he's concerned about inflation, the national debt, and the bill's reliance on short-term spending that could likely be extended. And so he said, you're not getting my vote. And in the Senate, the Democrats need a simple majority. So they need 50 votes. And they have 50 Democrats, which means if one Democrat says, no, I'm not going to vote on this, then that kind of stops everything. So since then, Congress came back in session after the holidays, but they've been focused on other priorities at the beginning of the year. If you remember, also back in December, Congress passed a stopgap measure to fund the government through mid-February. So that deadline's coming up today, actually. So they'll need to fund the government for the rest of the year. So that's on their agenda. And then you also had Martin Luther King Jr. Day this month. And so voting rights legislation has kind of trickled to the top and taken center stage. So you have the Senate set to hold hearings and maybe even a vote on potential elections-related legislation this week. And then they're even talking about maybe changing the Senate rules to try to pass the Voting Rights Act through the simple majority versus 60 votes. So that would require doing away with the filibuster rule. And that's something that's probably not going to happen because you have Senator Sinema and Manchin saying, we're not going to support this change in Senate rules. So find another way to get this passed. And so you have, senators working both in bipartisan efforts and just the Democrats to see some kind of voting rights legislation that's kind of taking priority over the BBB right now.
Yeah, it's interesting because it seems like kind of like the BBB, right? That there's kind of that same, you need all the Democratic senators on board, and clearly not there. But there's been a lot of conversations around that. I guess I've been having and hearing, because we have the House passed version of the BBB, and I guess the draft that was starting down that road with the Senate, right, in early December. But so we know what those provisions look like. And a lot of those provisions have, we'll say, kind of retroactive effective dates. And I know a lot of people in particular, like they're asking about, for example, the two-step or the backdoor Roth. And is that, can I do that? Any thoughts at this point in time, since it's really not in the conversation around those effective dates? I know we've talked about it some before, but curious if you're, in the last couple of weeks, if anything's changed from your perspective.
Honestly, if the BBB passes, it'll be a way different version than what we saw last year. Mostly because one, it'll probably be trimmed down significantly. So
Mm,
some people are saying about half the size that it was, so probably more around less than a trillion, which would mean that a lot of things would get cut or changed. Unfortunately, no one really knows what's up on what's going to be changed because it's more of a we need to get the number down and we need to address Manchin's concerns. And so that would look like just trimming it down cost wise. But then you have Democrats who are also up for election this year. So you have midterm elections coming up here in November, which means those Democrats who are up for reelection have been especially outspoken because they need something to take back to their voters here in the fall. And you have rising inflation, you have, rising COVID cases, and you have all these things that are kind of taking over the news and impacting the Democrats' chances right now for reelection. And so they're looking for a win. And at this point, they're going to take anything they can get. And so you have Democrats saying, you know what, if we can't pass major legislation in a big spending bill, let's just take it apart and pass maybe a healthcare bill or a bill that helps with pre-K education, or a bill even that focuses just on retirement provisions. And they're
uh-huh.
almost saying, maybe it's better to take this piecemeal and pass one small thing at a time than try to do this big bill. But I mean, obviously, you still have the problem where you still need 50 votes if you want to use the reconciliation package. You still have to get Manchin on board. And the budget reconciliation process can only be used for one, maybe two bills, depending how you phrase them each year. And so that really limits what could go through that process, and everything else would need 60 votes. And
Mm-hmm.
so, again, with elections coming up, I don't know that the Republicans are going to want to play nice and all of a sudden start passing all these smaller bills. So we want to we don't know. I mean, I think the Democrats are facing kind of a few big weeks ahead to try to figure out what they want to focus on. And if they do use the reconciliation process, what that's going to involve, or what kind of provisions would be included in that, and the effective dates for that.
Absolutely. It's gonna be really, really interesting to watch. It's just been, we've said that before. There's just so much going on, right? In Washington, it's hard to almost know what to follow. But in those sitting out there in the audience, I know you did the poll here, and 80% said no, you don't think that the Build Back Better is going to pass. And thanks for participating. Again, we like your input. That's very helpful to us. So thank you, and feel free to get your any comments or questions you have in as well into the chat. But Yelena, I guess, knowing that we don't know, right? And things are so uncertain. Any guesses on timing and like what we should be watching for relative to, obviously we're focused on the Build Back Better because of the potential for some of those tax changes that are included in there. But, so yeah, I guess with that in mind, anything in terms of timing at this point of what to expect from a Build Back Better perspective?
Well, you probably won't see anything here in the next week or two because, like I said, Congress is focused more on funding the government, which is a priority, and voting rights legislation. So once they kind of make progress on that, if they make progress on that, they'll probably come back to the BBB. But you also, again, you have elections in November, so you have campaigning season starting up here. It's really a spring and into summer, and so you kind of have that time pressure to pass something way before then. And so probably here in the next couple months, we'll see the Democrats in the White House try to work out what their priorities are and what wins they can get with what they have. And so
Okay.
you might just see kind of some Tetris going on, some, things playing around, moving things from part to part to see what sticks and what they could get some traction on. Whether it's the BBB or not, we don't really know. But I think the coming weeks will be telling into what the Democrats can get passed, whether that's, standalone bills, BBB, voting rights legislation, or even more COVID-19 funding that's been floating around too, which obviously Republicans don't support. So Democrats would have to push that through on their own. So really means anything goes at this point.
Yeah, very interesting. So a lot of uncertainty. I always appreciate your take and kind of knowing what to say, because I think that's the hardest part here, right? Is how do we navigate an uncertainty, even when maybe, again, if some of those provisions were to be enacted, maybe they impact the tax return that you're getting ready to file. I mean, it's sort of interesting. So, but I guess maybe we'll turn away from some of the uncertainty to something that we actually did talk about as it did happen last year. We had the infrastructure piece of the Biden agenda enacted in the middle of November, and in there was a reinstatement of some federal excise taxes, Superfund excise taxes. So, I guess, Ericka, I'm gonna turn over to you now, and maybe you can explain what they are, and really who would be impacted by this reinstatement?
Yeah, thanks, Damien, for having me. So yeah, this I guess that was a win on the infrastructure bill passed in November, and it had a lot of provisions on it, but within that there were two big things, I guess, for excise taxes, which were the restatement of this lapse Superfund excise taxes under code sections 4661 and 4672. So basically, these taxes were enacted in the 80s, and they expired in 1995. And so nobody had heard of them, but until now, the infrastructure bill. But bottom line, the biggest takeaway from there is the IRS or the bill at the time listed the 42 I guess chemicals that were subject to the tax explicitly under one of the code sections 4661, which is basically just imposition of any of these chemicals for manufacturers, producers, anybody who may be purchasing, selling, manufacturing any of these products. And the other part of it, which I think is another takeaway, is under the reinstatement of 4672, which is kind of the provision for the imports. Basically, in the past, it used to be a 50% threshold of a chemical if it met that. Now they lower it to 20%. So I think the biggest takeaway there is it, drastically increased the potential for taxable substances, and a lot more taxpayers who may not be or who may not have been in the past imposed, typical manufacturers for sure, but anybody else who imports or buys some of these products may be impacted by that threshold. So it is a little bit of a complex kind of matter of it. They also impose or increase some of the penalties for failure to register and whatnot from like 5 to 10%. So that's kind of what we saw there. The other takeaway was when the bill passed that we were going to get more guidance from Treasury on kind of what other chemicals will be subject to under 4671, which is the import section. And we did get clarity kind of last month a little bit, but bottom line, that's kind of where I think a lot of clients right now or potential taxpayers need to really go back and look at those listings of taxable chemicals and see if any of those could apply for their businesses, operations, imports, kind of their supply chain.
Yeah, well, then it's a fancy list of long words, I'll say, that are in there, but it's and we'll post a link because you've got two articles that
Right.
you did. I think that did a really great job of kind of laying out what they are and the percentage of the of the tax that applies. But so when does the tax apply? And let's just say, maybe is there an example, like you mentioned, like manufacturers, and particularly if you're using that that chemical or a substance in the process. When does it take effect, and how would you know, I guess, if you're subject to it, essentially?
Yeah, so basically it takes effect it's effective July 1st, 2022. And basically the way to go about it will just be clients will probably have to start reviewing their business line supply chains, anything that they may be purchasing or importing or selling of those potential chemicals. So I think my guide will be kind of go back to that listing of that and see if any of those could apply. A lot of the manufacturers probably there's a lot of listings there to go about. I guess the review that any of their vendors, customers who may manufacture these taxable products. I guess even interview personnel in your organization. A lot of the times, people who are going to be responsible for these taxes are, the finance people, tax people, and they may not know everything that goes in or kind of the composition of some of these chemicals. So I feel like they have to even maybe get involved with engineers or chemists to figure some of that. But I will say, I guess, bottom line, trying to go back to that listing, try to identify any of your product lines and kind of what you're purchasing in an effort to be able to comply by July 1st.
I gotcha. So what do you need to do to comply? Is there I understand it's like a registration process you have to go through.
Right. So that's one of the biggest things. So in the past, and as part of the guidance that we received last month, they reinstated the Section G of the 637. So basically, you have to get a 637 registration, which is part of like any excise tax activities. And so that form, especially for taxpayers who are familiar with it, can be pretty. The form itself is 3-4 pages, so it's not very hard. But I think the gathering of the information to get it right the first time takes some time. Includes a lot of background of your facility, your products. So it's pretty lengthy. And the other part of it is those tend to take a long time to process through the IRS. They only have about 20 to 25 agents that process those. I haven't heard yet that they're going to add additional, agents to help with this, given that more taxpayers, may need to register and start complying. So I think taxpayers here really have a pretty short time frame, right, to get registered as soon as they can, and they have all the information and be able to comply by July 1st, 2022.
Gotcha. Yeah, because there's certainly some time to work with here, but as we've probably all can contend, the months seem to go by really fast in the last couple of years here. So maybe just to give a range of, like, what are we talking, like, percentage excise tax? Because I know that it varies by chemical, or at least that's my understanding.
Yeah, so the original list that we're given of the 42 chemicals listed out the range. It's measured on a per ton basis, and they explicitly listed the rates per chemical. A lot of them double. That's something else to notice. So it was a reinstatement, but it was expanded because a lot of the chemicals double in rate per ton for what they used to be prior to the lapse in 1996. So I was looking at some statistics, and they said that Superfund Excise taxes could bring like $1 billion in revenue the first year. So they're pretty significant, and I guess it's going to impact a lot of the supply chain overall, right? How the purchasers, producers, importers have to track and keep record in order to comply with all these taxes, by July. So,
yeah, you get your ducks in a row, I guess, probably, right? Is probably the best, and get that registration done and start to model it out, perhaps, because it definitely can impact your, the cost of goods and so forth, for sure, right?
Right. I mean, ultimately, that's going to pass down to the consumers, right? At some point, they're going to have to pay that. But I guess in terms of companies that have to comply, there is the whole registration requirements that have to happen. And honestly, I guess Christmas came in last month when during the infrastructure bill, they noted that the IRS was going to give guidance by January 1st. But it actually came earlier. And at the time when they released, I guess, that additional list of chemicals, the other important provision, aside from the reinstatement of registration requirements and how to go about that, they also suspended the notice of 8961, which in the past, what that notice used to be is basically allowing taxpayers to submit a request to the IRS and say, can you review my chemicals and kind of help me determine kind of whether they're taxable and what percentages what percentage would apply of tax. And so the suspension of that now kind of leaves it on a limbo. They basically said, we will kind of update this and any changes that we have and provide, additional guidance. But as of now, I will say that the taxpayers can't request any to provide any comments by January 28 on that matter. If they have any comments, questions that they'd like to submit. I mean, I know the big players already have asked those questions, and we will see kind of what additional guidance we get. But it's something that a lot of professionals haven't dealt with, I guess, in their career. And so it's something to get educated on and just kind of figure out, again, also what was done in the past, but kind of what are the changes and how, honestly, I think the hardest thing, the math can be easy done. It's basically, if you have the number of tons times the rate, that's not hard to compute, but it's going to be really identifying the chemicals that will be taxable, the fact that the supply chain has changed over the last 25 years dramatically, probably from what it was, and figuring out if you have the proper, I guess, ERPs, any reporting to help you comply.
Yeah. It's a lot to kind of think through and get ready for, especially like you said, it's been some, would you say 95 was when it was suspended previously?
This were provisions in the 80s and expired in December 1995. So
okay.
A lot of those has been those sections have been kind of now reinstated and kind of modified with this additional, I guess, the rates and the thresholds that they're adding. So we can, a lot of what we predicted that will happen has happened. I think the little surprise was there on the suspension of 8961. I think they wanted, really, they're putting the burden back to the taxpayer to make those determinations, as opposed to you requesting IRS to help you make taxability determinations on some of those substances as they are imported into the U.S. So I think there's a lot to come. There's more guidance. There's definitely, I will urge any taxpayer to really look at their, especially any manufacturer, anybody who buys and sells any of this or imports any of these chemicals, to start looking at their supply chain basically and figuring out they could be impacted. And if so, figuring out to get that 637 registration as soon as possible. Again, they can take up to, like, in my experience, 3 to 6 months. And so getting that ready and then be able to have your systems or whatnot able to comply by July 1st.
Okay. Well, great advice. Well, I'm sure we'll have to kind of check in on it as well. And we have in the comments here, the chat, we've got the links to the 2 articles that you did. And we really appreciate your insights on it, because it does, again, it'll come up fast. But if you're talking 3 to 6 months to process, well, we're already looking at that. So now time is of the essence, I guess, now. But with that, let's roll into our top takeaways for this week. Okay, so I guess first and foremost, I want to say Chuck had a great comment in the comments here about some of the challenges with the IRS and some of those issues, and actually we're going to focus on that next week, because actually next Monday, so we're a little less than a week away, is sort of the official start to the tax season for this year, where the IRS will start to accept e-filed returns, electronically filed returns, that is. So we're going to talk a little bit more about the tax season and some of the challenges that are, it's no secret with the IRS, and the service challenges and the resource challenges that they're facing, despite, all best efforts. It's a challenging situation, to be sure. So I guess with that, maybe Yelena, I'm going to go back to you, and, what should we be watching? What are you watching? And what's your big takeaway for this week?
I think my answer is the same as it is every week, which is watch the Democrats in the Senate, especially you have Senator Joe Manchin, who's been the most vocal one. Ironically, you're more going to see the House Democrats doing the news conferences right now, doing the interviews, because most of those are up for a re-election. And so they're kind of making the circuit publicly and making comments. But honestly, the House has already passed a version of the BBB. It's kind of out of their hands. And so it's great that they're doing these, news conferences and interviews and provide some context and priorities. But honestly, it's up to the Senate, and it's up to them to figure out what they want to prioritize and what they're going to be able to pass with 50 votes and to get Manchin on board. So I think more just watch for what's coming out of the Senate in the coming weeks, because that's going to be really the driver of anything the Democrats in the White House will be able to pass, is honestly just what the Senate lets pass. And so just looking for any news out of the Senate, any news clips, conferences, interviews you see senators doing.
Yeah, for sure. It is an interesting time, and it just shows how that tight vote count, right, is being really divided as evenly as you can in the Senate, even though that's the Democratic majority with the tie-breaking vote from the vice president. It just goes to show you how challenging that can be, and I guess the politics are kind of ensuing here. So we appreciate your updates as always on that. We'll of course be back in our live stream here again next week. Like I mentioned, we're going to talk about the IRS, the start of the tax season, a few other issues, even some people related issues if you're working in the tax arena. So looking forward to that conversation. Again, make sure if you haven't already, subscribe to our channel. Let us know what you think. Again, we started this really for you, right? And as a way to be able to interact with us in a different level and in a different way. So we want to know what you think. Comments. You can also shoot us an email, BKD or simplytax@bkd.com. I've got that in the chat as well. So I guess until next week, have a great week and thank you for watching.